So, Paul, just before we got cut off, we were talking about the state of retail right now. Please share with us, from what you're seeing and your experience, what are we actually meant to believe in terms of where are we as a retailer right now?
Yeah, Nathan, look, as I was highlighting, I mean, 2019, we saw a decline of the overall retail market. 2020, 21, we saw growth. 21 was, of course, very significant growth due to all of the pent-up demand, etc. I mean, you do need to sort of look below the headlines here. And, of course, different sectors have performed differently over the last couple of years. So from a revenue growth perspective, of course, the grocery categories related to the home have seen a very significant uptick in demand. Categories that were deemed as non-essential, apparel, of course, being a key component of that cohort, had a very rough time in 2020, but in 2021 have rebounded very strongly, and therefore it's all to play for in 2022. The big challenge in 22 are all of the external factors such as macroeconomic drivers such as inflation. You just need to look at what's happened in the news today, geopolitical challenges which will drive costs, supply chain, labor, commodity prices. That is the big challenge from an external environment. And then the final point, which we still have to see how it will pan out, but for the last 2 years, a very significant proportion of consumer spend, which has been outpacing retail spend for the last decade, of course, has been diverted back into retail spend, as we largely have not been able to travel. We have not been able to dine out to the extent we wanted to. So therefore, a lot of that out-of-home consumption has switched to in-home consumption. The big question for later in this year, and if you believe the various commentators that highlight overseas travel booking numbers, etc., a lot of us will be utilising that pent-up demand of travelling overseas and embracing experiences and spending less on physical stuff, which of course has seen the retail sector heavily benefit in the last 2 years.
Thanks for that. There's at least we can say that there sounds like there's growth in the pipeline for a lot of people, and at least everybody's experiencing the same macroeconomic factors and geopolitical factors. It does put some of us, at least on an even keel where that's concerned. Moving closer to home, we see in news out today that demand for new central London shops is at record levels. But the Financial Times reported last week that smaller UK regional high streets have bounced back stronger at the start of the year than London and other cities more reliant on office work. What do you think the future holds for local high streets versus those famous areas such as Oxford Street or the Trafford Centre?
It's another great question, Heloise. And I mean, just look sort of in that context, unsurprisingly, the tier one locations have seen a significant downtick in footfall over the last 2 years, heavily dependent on both domestic, but more importantly, international travellers. Those have largely stayed away for a long period of time. And in comparison to a trend we have seen over the last 20 years, a revitalization of rural locations, but also suburban locations. Now, if we start working more frequently in tier one city centres again, then of course that footfall will increase again. But my prediction is that it will take another good 2 years to hit pre-pandemic levels, as there is a dependency on international travellers. And there is, of course, a fact that most of us are unlikely to be back 5 days in the office every single week. There'll be much more of a hybrid approach, which will automatically mean a recalibration of that footfall. But what this is leading to is a market correction around the cost of real estate in many locations. And the UK, and specifically London as an example, were out of kilter the rule of thumb is normally 5 to 8% of your store turnover should be attributed to rental cost. In some London locations, it got more to 20 to 30%, and then retailing in those locations just doesn't become viable. And we have now seen a definite end to the space race as we knew it in the past.
Brilliant. Thank you, Paul. I've got a question here around shops becoming more dispatch hubs or offering something a little bit more traditional bricks and mortar, whether it be classes or demos or some kind of experiential event. I mean, how do you think shops are going to evolve over the next 2-3 years, and how can we get more retailers really embracing far more than just a simple bricks and mortar store?
But there is no one-dimensional answer to this, and there are a lot of theories and hypotheses, and many wise and potentially some less wise words have been written about this over the last years. The starting point here is you really need to understand the shopping mission related to the specific physical purchase occasion. And in that context, let's be really clear, online has accelerated significantly, but the store will remain the most important channel and will very likely still uphold 60 to 70% of transactions. If you look at a median, in some categories that number will be higher, in other categories that number will be lower. But it's no need of investing heavily in some type of experience if the shop is fulfilling a specific mission where it's all about getting in and out quickly, a top up, a distress shop, etc., etc. If you are looking for a more experiential type proposition where you want to bring the proposition to life, then absolutely utilizing some of the points you mentioned, such as be it cooking classes or demonstration of products, etc., is really vital. And we have seen a whole host of retailers do that very well in the past. Others, of course, specifically mass or general merchandisers that operate across multiple missions, finding it much, much more difficult. And this is where you will have to place your bets, and you'll have to understand which are the key missions you are catering for and that are most profitable for you and will drive the biggest revenue uplift for you. That's where you're going to have to play in the future. But the starting point is understanding why your customers are coming to you.
That's a great insight. Thank you for that. We know that high street sales have been up almost 12% compared to last year's lockdown results, but retailers are facing tough decisions due to rising inflation and other costs. Which costs should be passed on to consumers and how?
It's another really interesting point. And yes, look, I mean, sales are and have increased over the last quarters. I mean, a component of that is that pent-up demand point that I referenced earlier. We believe that about £180 billion of savings have been accumulated over the last 22 months. So money that we have not been able to spend on various different events over or propositions over the last 2 years. And only about 25% of that has been re-released into the economy. Now, there is a big question about how confident does the consumer feel, specifically with more worrying economic times potentially ahead of us. How comfortable does the consumer feel of spending that pent-up demand? But if we look specifically at 2022, we do believe a significant proportion of that pent-up demand is going to be spent. The inflation point, and I do believe that some of the economists are currently undercooking the situation. And if I look at a lot of the forecasts, they've gone from a median of 4.5% back in October last year to 5.5% come sort of November, December. And most economists are now saying 6.5% is the median, with a spike in April or May of this year. Inflation will, of course, drive significant cost increases. And the media, of course, is doing a very good job in potentially preparing, whilst at the same time also scaring the consumer around the sort of cost of living crisis. So therefore, many of those costs that retailers are incurring are going to be passed on directly. We all know margins in most retail categories are pretty thin, and therefore, with the current macro situation, most consumers are expecting prices to be passed on. The big sort of question mark here is, and this is where we will see the good operators and the less good operators, those that truly understand pricing elasticity and have a more efficient operating model will be able to withhold some of those price increases to gain market share gains. And this is where it's going to be really interesting. And we've often seen, specifically in these times, the value-based retailers are more sophisticated from a pricing, but also an efficiency perspective. Because of the point around inflation, if everybody raises their prices, it's fine. And then people technically should be in the same place. But there will always be some outliers who have more degrees of sophistication who could actually win in this situation.
So the answer is, I was going to say, so the answer is that the tough decision is if you keep your prices down, you'll get market share, but not everyone's going to do it. I'll go on, Nathan.
I was just going to say, I mean, rolling the clock back 2 years, which is crazy to think that's when the last time we all were together and speaking, we were talking about the importance of omnichannel retailing. From what you've seen from then until now, have you seen more and more retailers embracing omnichannel and truly understanding it, or is there still a long way to go?
Look, I wrote in my retail outlook for 2022, we published in December, and if you would like a copy, feel free to reach out to me. I wrote then that channel convergence, another word for omnichannel, is absolutely going to continue. We've seen many bricks players invest heavily in this space, and of course, the last 2 years have showcased the need to really accelerate your online proposition, in some cases sacrificing profitability, which is going to be a big challenge that needs to be worked through over recent years. But the actual real big news, and this is the point I highlight in my 22 prediction, is that a lot of the online players are coming in the other direction, as they've realized that a pure play digital approach cannot be the way to succeed in the future. Cost of acquisition, cost of retention is becoming increasingly prohibitive to run a profitable business. And we've seen a whole host of retailers announce flagship propositions, announce store networks across the UK or Europe. So it shows us that hybrid is the future. And then you do connect that with the point I made earlier around the cost of real estate and the recalibration we're seeing around rental rates, etc. It could lead to a renaissance of the physical model working alongside various digital business models. But what is clear, the future is hybrid, and the hybrid has to be interconnected. And I also speak a lot in my outlook for 22 that the concept of channels is becoming increasingly irrelevant. We think in channels as professionals in this market, the consumer doesn't.
That's awesome insight. Thank you so much for that. Previously, you spoke about how sustainability is becoming an increasing priority for both brands and consumers. This year, will cheap beat green?
It's a bit of a double-sided agenda and point here, which is a real challenge. Intellectually, we all know that the health of the planet, the health of the consumer has to be at the forefront of everything we think about. And if you look at some stats which are quite startling, in 1921 in the UK, we spent about 50% of our income feeding ourselves, the rest on housing, and maybe once a quarter going to the pub, or a couple of days in the summer going to the seaside on a sort of 2 or 3 day break. In 2021, we only spend 8% of our income feeding ourselves in the UK, and we spend more on housing, which is another issue and another challenge to deal with, but we spend a lot more on other propositions, be it products, be it services. We've spoken about leisure, entertainment, travel earlier, but it does showcase that cheap is become the race to the bottom. And you could argue a £1 t-shirt and 99p ready meal lasagna is too cheap and is not sustainable for the future. But we have been caught up in this race to the bottom, and inflation could be a chance to actually break that cycle. But if you look at this more critically, and I mentioned intellectually, we all know this is a really important topic. For lots of retailers in this space, they don't know where to start. We also know it's a low margin industry. There's an awful lot of narrative, and I chair the UK Retail Think Tank. We wrote a paper last year saying that retail is behind the curve and needs to catch up. But where I think there is a great opportunity, specifically to the point we mentioned around cost and efficiency, cost is only going to go in one direction, as we discussed. But if you can bake in your cost and efficiency agenda, so if you're thinking around near-shore sourcing versus far-shore sourcing from a supply chain perspective, and you can generate cost efficiencies there, and at the same time reduce your carbon footprint, then that is a double bonus. So I think the cost and efficiency agenda connected with the E part of the ESG agenda is going to be really important. The G part of the agenda is something regulators are only going to move in one direction on. And that, of course, is going to be the stick. So we want a carrot for people to do this out of their own will. But sadly, in some cases, the stick, as in regulatory and compliance related themes, are going to force us to do things. But I do recommend to the industry, it's always better to follow the carrot than the stick.
So if we can combine cheap and green, nearshoring, and getting more market share, that's really going to be a win for everybody without being beaten around the head with a stick. We're going to have to go to our last question, which is, what 3 things should UK brands focus on improving in 2022?
Look, I think there are 3 key strategic recommendations I'm highlighting at the moment. The first is your business model. And I know this is a macro theme and I could go into an awful lot of detail around this, but it's a little bit like painting the Golden Gate Bridge. Business models are evolving. Channel go-to-market strategies are therefore evolving. So you're going to have to be agile with your business model. You're going to have to constantly question how your routes to market is set up. And the reason I reference the Golden Gate Bridge, you start painting it, it takes apparently 2 years to paint it. And guess what? The day you finish, you go to the front of the bridge again and you start again. So this is not revolution, but this is constant evolution and evolution at pace. The second key focus area has to be on that cost and efficiency agenda. And in some businesses, in food, I would say 10 to 20% of your pre-COVID cost base will have to be eradicated, because of you're going to have to replace those costs with technology, supply chain, ESG related costs going forward. In non-food, it's going to be more prominent. You're probably going to have to look at up to 50% of your pre-COVID cost base, and you're going to have to eradicate that, because of you're going to have to fundamentally reinvest in other areas. And the third key theme is, of course, supply chain resilience. We are seeing supply chain networks fundamentally changing. Globalization, far-shore sourcing, which was so lucrative or perceived to be so lucrative for many years, is not as easy as it used to be. And for lots of organizations, and excuse my slight tongue-in-cheek here, the supply chain, the trucks and sheds bit of the business was often the grubby bit of the business at the end of the board's table. That was sort of perceived as a slightly more grubby topic. It has to be an absolute number one topic around the boardroom. If you haven't got anything to sell, you can't make any money.
That's a really great insight, and I'm going to put those in the comments. Thank you very much for this whistle-stop tour of UK retail. We're sorry for the technical difficulties, and we really appreciate your time today, Paul. Great insights as ever, and I'm sure we'll be reaching out for you for some of those white papers. For those of us on the session, the next session we're doing is Talking International Tax for Ambitious Brands with Avalara, Thursday, 24th of March, 12:30 to 1:30, with myself and Nathan, Engage with E-commerce.
Massive thanks for your time, Paul. Good to see you on. We'll see you again soon.
Thank you very much.